Hey, it's Mack with PriceActionTradingSystem.com, and it's Tuesday, it's April 5th. This will be our chart lesson for today, and it really was just a range day. We traded down into this range, so generally uh, when you get a successful breakout, it's going to go lower, but we never really got one today. It looked like we were going to take off here late in the afternoon, but it bounced, and we've taken all that back now as well. I actually took most of it back, and we're inside the range before the close. This line going up right here, you may not be able to see it, but that's the close right up and down through there. So pretty much a range day. If you just follow the range rules, if you um, bought the lows, I actually missed a trade right here. Actually missed a couple of them. This one could actually be green here. Um, talk about them when we get to them, but I just noticed I failed to circle those. But let's talk about the trades. You notice we had a failed break out the top, failed break out the bottom. We had a couple of them out the top really, but most of your resistance was right along this 2044, 2045 area, and most of your support was, average right around the 2038 area, so to speak. So, um, but let's back out, talk about the trades. I'm going to move through this one pretty quickly today. I have a meeting tonight today at 6 that I have to make, and I've got about an hour to do this and get it uploaded. So first trade I saw was real obvious. We're going sideways by the end. Actually at that point I had this a little bit higher. Um, Still got plenty of room to scalp out there. I'm going to go ahead and move it back down here where I kept it at the end of the day. But at that point it was a little bit higher. But this is obvious. Look at prices going back and forth, both sides. We got a nice trap here. You get a pullback with the first entry, then you pull back and you get that second entry long right there. It fails. It's right off that little trend line working down, and it turns and instantly goes out the other side. I love those setups. It's a trap, and it's usually fairly quick. And you can see it was a real quick move, and then we bounced. Um, Notice how we made a higher low here. Uh, you come up, you get a little break of that trend line right here. So that's the reason I didn't like going long here. This one's tempting. It's a higher double bottom than these lows, but you got that trend line and you just broke it, and you didn't quite get a new low. So you need to wait on that reversal pattern, and it shoots through, pulls back. You get the failed second entry short. Go long right there. Another quick, easy move. And there's another second entry long here, but there's just too much congestion there. Too big a chance it breaks higher and turns down. It does break out. This is really your signal bar here. This one has a matching high, so you could use that one as a signal bar. You could probably make the argument that this is an aggressive trade. Somebody actually asked me about that trade. They took it and wanted to know what I thought about it. I do think it's aggressive, but so it should be green. But I never really went back and circled it. So, um, and the only reason is because it's a little piece away from the EMA. But you got a channel working up and you don't have a break of it yet. But it is coming off the high side. But you never know if it hits right here and bounces and goes up. So it's a little bit aggressive, but it's a good ways away from the EMA. So, and then you're working down. You get a first. Look how it shot right through the EMA. There's your reversal pattern. It tested it once, pulled back, tested the trend line again. That's your failure. It turns down. Um, as soon as it broke below this bar, I treated that like a failed. Even though it didn't break higher, let me make this a little bit bigger. Even though it didn't break higher here first, it's close enough. It's two attempts to go higher, and I treated that like a trap. Failed second entry long, and look at it, how beautiful it was. I mean, that's a quick, easy move. And this was your first close outside, so once we got a break above that, I would exit right there. Or really the way to play this is just have you an exit right here, a tick or so above these lows, these important lows, and that would have got you out within a point or so of the bottom. Um, so anyway, and again, it's tempting to go long down here because you're way away and you've got your break and new low. But I don't like the setup here. It's just kind of going. It's not taking off like you would like. But notice what happens. You got a new low. You're moving up. You push on through. You pull back. You get a first entry short. Pull back. You get a second entry short. It's a fairly bullish bar. It closes above that EMA. I like going long. And look at it. You know you trapped them. You know that all these shorts are exiting because look at it go. Boom. It just rockets on. That's a great setup. And these two sell-offs here were both this one. Actually, it wasn't that one. It was the 730 one. So right in here, some news came out. It didn't really affect the market much, and then it just sells off and bounces. And then there's some more news right around 9 o'clock, and this is a um, high volatility one. And, you know, did it cause this sell-off? Who knows? It didn't really affect the market real, greatly. But there were some news items, but this right here, this was beautiful. So then guess what? You shoot right through the top. You take two legs back to the trend line. You get a bullish bar right there. There's two more tries to go lower there. There's a double bottom right here, so that's like a new low. So it's a failed second entry short. It's a real bullish bar. Lots of reasons to like that one. And look at it shoot off again. And this is the one we talked about. Actually, no, we didn't. We didn't talk about this one. Now look how far away. That's far away from the EMA. See, this one's a good bit, but it's not like this one. And we're way overdone. And this is a range. We're going back and forth. So I like this one to the short side. This turns out to be a nice trade. There's a second entry short right there, but it's right into the previous support and resistance, and it's just a second entry counting off the high. I'd like to see a trap or something else, and you do get that failed second entry long there. So I like that one. It's not a great setup, but it is a trap. And so I went back and forth about whether or not to, and it's a double top there, and actually by this time a lot of your resistance is right there, and if you move that line up there you can see that. So that's another reason I like that one. And but I like that one because it's a trap. I really thought we would shoot all the way down. I was surprised when it bounced again. But that's why you got to be careful and make sure you don't get in too early. But we were looking for a new low here as well, and we got it. And then we bounced. And it's tempting to go long right there, but it's right into that resistance area. So a good reason to skip it, see what happens. And when it turns up and fails, that was another great setup right there. I really liked that one. The reason I had this trend line right here is because I found it off these lows right across here. Really just kind of drew it across there and pulled it up. And so that's the reason I liked it there. You get a break really quickly on it though. But I like that second entry short and failed push higher right there at the resistance. And again, the bottom just falls out of it. And, you could have gotten runners on a lot of these. This one, this one, this one. This one, this one. And some of these are for multiple points. But then we bounce down here. We're just kind of going sideways again here, but notice the new low, pull back first entry short, and then you shoot right through the EMA, pull back, and it fails. It actually goes lower and turns and goes up. I like going long there because you're going to trap the shorts. That's the first break of that trend line, and it runs. It's another. You can tell it was a trap because look how it shot up real fast. And then you actually had your break here, you push to a new high, and look how bearish that bar is. Just go short right there. And it's another quick, easy move. And you would have had a runner. It would have survived by a single tick. There's actually a second entry short right there. That one should probably at least be green. I didn't mark it at the time because it was kind of going sideways, and you really should have already been in here. But it is a trap, and it's fairly bearish. It is a second entry. It's a failed second entry long, but well, it's actually not because it's broke higher, but it's close enough. Something looks close enough, but it's a second entry short count from here. Pull back first entry, pull back second entry. Nothing ever really broke higher, so you don't know you're going to trap a lot of people. It does work, so I tell you, I'm going to make that one green because some of you probably. It does fit the rules. There's some reasons to be a little concerned about it. But if you understand why congestion is happening there, prices, there's still a lot of buying going on, but um, you got all this resistance of the EMA and the trend line, and the bind's not strong enough to push through there, and then suddenly it drops on down. Then it tries it again, and it still can't really get through there. It just makes a little trap. But notice you pull back, first entry, pull back, second entry. You get a big bearish bar. You're ready to go short there, and it doesn't happen. And then you make a little higher low right here. So I'm okay just moving your stop up one tick and seeing if you get filled. Or you actually could have let this one break lower and put a limit order, a tick or so back in there, and you would have gotten filled right at the bottom, maybe a tick back in, and then look, the bottom falls out of it again. And again, you caught runners here, real quick and easy. There's another second entry here, but I didn't like this one because there's no break of this little trend line working up. You already had a break of this one and a new low and a failed break, so I really was looking for it to go higher. I was really surprised that we had this net one more push lower, which we did. But you can't go short there. You definitely don't want to go short in here, and then it's just kind of going nuts. And this turns out to, and when it breaks below there and you get this bullish bar, if you had a bullish bar like that, go long there. This is really your signal bar, so your stop has to go here. What I like about this is you could let it break higher and drop a limit order, and you would have gotten filled back where you were supposed to, maybe even back to a tick better. And that way you give yourself a little more room before the EMA, but guess what? It doesn't matter. It pushes right through, pulls back, gives you a second entry long, bouncing off the previous support. Nice bullish bar, we're back above the EMA, and you're probably going to get a measured move like that one. Just go long there, quick, easy move. And then it pulls back, and you don't actually get a second entry here, but look what it does. It pulls back, it tries to go higher, it turns down, and it touches this low, the support, and it turns right off of it and goes right out the other side. That's like a two-legged move. I like it. We're probably going to the other side, which is exactly where we go. We end up. Notice that. So that turns out to be a really good trade. And then you get another second entry here. Notice that you make a new high. And notice how we didn't get back to the trend line here. So we're probably, if we overshoot it, you're going to get your break, and you're probably going to overshoot it. So you pull back, you get a first entry, and then you get that next push lower. This is a double bottom here. So you can treat that like a new low. So that's a failed second entry short. It turns up. Just go long right there. And you're looking for prices to come back up here. You may just make a new high and turn down, but the odds are you're probably coming up here, and that's exactly where it goes, and then it turns right back down. And where is it headed now? It's after 2 o'clock, but it doesn't matter. It's pretty obvious this is a range. So where are we headed now? We're headed back down to the lows, and look where it goes and bounces before it goes a little lower, and then where's it going? It's coming back to probably to the top, and that's where it's headed right now. But we're in the next day, so pretty straightforward today. Nothing really out of the ordinary. Nothing really too difficult. A lot of times in the middle here, you got to be a little more careful. The better trades are usually going to be off the highs going short and off the lows going low. But anytime you see a trap in there, by all means, you want to take it. But yeah, another nice day. Even though it's just a range, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. There's 14 blue or red circles, and there's 1, 2, at least 3, and you might could argue the case for a couple more green ones. So lots of trades today. You only have to be patient here and there occasionally. So if you just sat there and waited, you got a good setup, you got a good trap. And these traps, I tell people, if you're struggling with second entries, don't worry about traps, because you got to understand a second entry first. And what happens is people hear me talk about these traps, and they see how well they work, and they just lose focus, and all they're focused on is traps, and they can't understand them. But you got to understand a second entry first, and because that's where most of them occur. But a lot of them will occur down here near the lows and the highs. They occur all over near key entry points, basically. But the idea behind a trap is they fool a lot of weak traders into entering in the wrong direction, and they quickly reverse it. And those traders have to exit. And that's how they'll push this thing a lot of times through these strong uh, lows and highs of a range. They've tried to get through here twice, and then everybody gets loaded up going short, not paying attention, not understanding, and then that gives them the momentum to push it on through. And that's what happened. They trapped everybody short, and it pushes it on through, and they run. And then all the inexperienced traders jump on long right here, thinking, hey, because that's where everybody teaches. Buy the breakout. If it breaks out the top, go long. If it breaks out the bottom, go short. And 90% of the time, they're just going to trap you on the wrong side, and it's going to reverse. And that's exactly what happens here. So you want to take advantage of taking that back. And they still tried it again right here. They were all trying to get long, and finally they gave up, and look at them all exit. And then the same thing happens down here. They trick them into getting in. So I guess my point I was trying to make there is that the idea behind a trap is it fools a lot of people into entering in the wrong direction. And that's why you'll see these huge moves afterwards, because that's what happened right here. All these shorts are giving it a little time, and when it shoots through the EMA, they realize, hey, something's changed, and they all start exiting. And by them buying back their shorts, it runs it right back to where it started from. And then they all start getting in here and get trapped short, and they run their stops again, and they probably ran some more when it broke through. All the people buying here, it suddenly surges until they run out. There's no more buyers, and then all the sellers, they sell it off real quick, because the people that are smart are selling into these buyers up here, and when there's nobody left to buy, all the sellers the bottom falls out of. So remember that traps are designed to fool you. And usually if you think you've had a perfect trade and you enter and you're wrong, you probably got trapped. And that's why, because they look like really good trades, but you got to, with time and experience, you learn how to spot them, and you understand what's going on, and you follow the rules, because the rules will tell you, don't get long up in here, don't get short in here. Get short across up here and get long across down here. That's how this works. And the problem is most people cannot watch this thing fall strongly like that and then start buying. They can't believe it. They just don't trust it. And that's why it works, because they're not smart enough to understand it. They can't trust it. You got to trade this and watch it long enough to get the experience to trust it. So anyway, I'm going to wrap it up. I need to get out of here today early. So we'll be back again to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.